Hello everyone and welcome to another Elliott Wave Forecast intraday video day. My name is Eric. Today is the 2nd of October around 6 p.m. Eastern Times, and here we go guys with another technical video. In today's video we're going to take a look at the SP 500. Well, the SP 500, as we've been waiting over the last few days, finally it has showed the fakes. We know that the SP 500 is in the ending diagonal in a cycle from June of 2013. Over the last few days, we have the issue regardless and waiting for the market to describe if the wave 3 in red was in place or the wave 3 in red it wasn't. Fortunately enough, the market today looks like it showed the fakes, and the market declared himself showing that the wave 3 in the S&P is in place. Now, what does the S&P have done from the highs? Nothing. A very technical 7 swing structure, in which, as always, people tend to forget that doesn't matter the speed of the moment or the speed of the moon. What happens is the distribution of the sequence and the distribution of the momentum and the of the market. So with that being said, the S&P starting dropping over here around the 19th of September, and it did a 1, 2, 3, 4, 5, 3 backs, and it did an ABC. Last Friday, the S&P rally took this pivot and it stayed sideways, and it did a running structure in the middle. It cannot be a triangle due to the fact that in the new Elliott Wave, as many members and non-members know already, in the new Elliott Wave, a triangle is nothing more than a structure that it have to be contracting in price and also contracting in momentum. Think about it. What does a triangle is? In the Elliott Wave principle, the triangle is nothing more than a contraction in momentum when the two sides they are fighting and they onto the market break one side. That's what is called contracting triangle. With that being said, when we take a look at the S&P RSI reading, we know, looking at the RSI over here, that the S&P, let me put it this so you guys can see it much better, that the S&P over here, this is the reading, that the S&P over here, when we put it in this height, the RSI in this peak read 56.79. You can see the read here, 56.79, and in this peak it read 56.38. That invalidate the triangle. So it was a running structure, and then the S&P dropped from this peak over here in 1, 2, 3, 4, 5, 6, and 7 to where? To the equalex, when the W in red equal the Y in red, which make the blue in W, and then related to the X. Now, why does the S&P bounce here? Because any news? Because somebody say nothing? No, there was the same market condition that when the market opened. We knew yesterday that the S&P is going to go to 1932. Why? Because the power of the equalex. So now the S&P have break a degree of the trend. Consequently, what we are expecting is, we don't like the selling. What we're expecting is continues to buy in 3, 7, and 11. I want you guys to look at the Elliott Wave forecast charts. What do we have? Now you see the dark chart. That means that should be a corrected structure. Why? Because the S&P break a pivot which is reflected in these charts. This pivot of the wave falling blue, it was taken. So with that being said, the S&P should fail and continue lower, and that's why you see the arrow in black. Very easy. What we like in the S&P is continue to buy the S&P. Where we like it lower. But as you guys, and the point of the video is, you see that everything always bounce in 3, 7, and 11, regardless the speed or the distribution. And that right here, the S&P makes a perfect bounce after a 7 swing structure, very well detailed here. You can see 1, 2, 3, 4, 5, 6, 7, and this one from the edge red 1, 2, 3, 4, 5, 6, 7. So as always, Elliott Wave forecast, we are not 100% right. That's impossible. But we know the right side of the market 80% of the times. It's just Elliott Wave techniques, pivot system, market correlations, and execution of the trade. We've been telling members all week, be careful with the loans, play the shortest structure, and that's exactly what it play out. Now, today, every member of Elliott Wave Forecast knew that the area to buy the S&P was between 1932, 1919. If they bought it today, they're free and break even. That's what Elliott Wave Forecast provide. Right? Thank you. Hope that everyone enjoyed the video and hope to see you all around Elliott Wave Forecast. Thank you guys all.